Hello, Stock Planner here. Looking to make a trade this week. Looking at Marvell Technology and looking to sell a possible poor man's covered call. I'm targeting a 15% return over a 15-month period. And my target price, I'm hoping to be around $100 in that time frame, 15 months. Looking at the weekly chart, I'm a swing trader and I'm looking for the bottoms and tops and that trend in between. And I use several indicators, one of them being the RSI. When the RSI is below the 30, sometimes I'll look for a reversal. And it just so happens that we had a reversal within a few weeks of that occurring. Likewise here, a nice run up. And it sort of missed its mark here. We had a little run up here. This is the MACD, and when it shows a crossover, that's usually a bullish sign, and that's when the trend begins. And you can see these little green bars will indicate the trend. And we got that crossover just recently, and that's what makes me think this is going to run up. But maybe not for the short term, but for the long term, I think it's going to run up. The Marvell is not the comic book Marvell. They're makers of computer chips that you need for these so-called AI data centers. They build high-speed chips that are very useful for those data centers and cloud networking as well. There's a high demand for these chips. TradingView has the technicals as a buy and also the analyst rating as a strong buy, and they think it's going to go up to $121 way up here by years in 1 year, target 1 year. So I'm a little more conservative. I think it's going to get to 100 in that 15-month period, but I actually think it's going to occur in 3 or 4 months. So this is a stock I want to talk about. We're going to analyze it, go through a process, and see if there's a trade, particularly using a poor man's covered call. But before we get started, I want to recommend that you learn this on your own, do your own due diligence, and win for life. Don't copy trade. I'm not recommending anything, and never follow anybody on the internet. You have to do this for yourself. You have to understand it for yourself. With that said, let's get into Marvell Technology. So what sector is Marvell Technologies in? Well, electronic technology, semiconductors. As you know, all the semiconductors like NVIDIA, AMD, and others have been beaten down all last week. In fact, all the stocks have been beaten down. Let's check FinViz. Now this chart is a FinViz chart. It's on the daily time frame. We were looking at it on the weekly. And you can see that this stock is trading above the 200-day moving average. That's normally a bullish sign. This is optionable and shortable. Their target price, again, is 121, and it's a fairly high PE of 29. This is a profitable company. Now, this video is being made on Monday night, March 23rd, and it's a fairly good day in the market. All the big boys were popping, and technology and semiconductors had a pretty good day. But if you're looking at the list here, you don't see Marvell Technology anywhere. That's because it's a NASDAQ 100. But I want to look at the weekly before we move on. This is the S&P 500. I'm trying to just get a little scope of the market. 1 day of performance. Let's go to a week. And things don't look so good here. Energy looked good. Financials didn't look too bad. Again, energy looks good for the month. Financials look good for the month. Hardware, software looks okay. Generally, healthcare should be fairly strong, but it doesn't appear too happy right at the moment for a month. This is the NASDAQ 100, and we're looking for semiconductors. And now you can see Marvell. It's about the fourth from the bottom. And it had a really good day today. It climbed 2.5%, beat out NVIDIA. And we'll look at the weekly. That really, to me, doesn't look too happy. And what I think is happening here is that some of the other sectors are doing a little bit better these last 2 weeks while the war was going on. In the technology sector, the results were mixed. Some went up, some went down. But I don't think it's broke. And some of the key catalysts for the technology sector and the semiconductors are this continued AI data center build-out. I live in Virginia, and there are several proposals for data centers. They're not very popular because people think that they're going to take all the water and raise the utilities bills for the rural areas, but they're coming. Special chips or specialty chips will be in demand. And it's hyperscaling by Google, Microsoft, AWS, that's Amazon. Those companies are going to need the technology that Marvell produces. Now, does Marvell have a clear 3-year growth path? And I think it does, driven by those data centers, custom chips, and other specialty technologies. Looking at a tool called Simply Wall Street, they're saying that earnings are forecast to grow by over 18%. Now, when you're looking at an earnings chart, earnings and revenue, this is what you want to see. You want to see that upward trajectory. And likewise, for earnings, keeping more what you make. Now we beg the question, is it undervalued? Using the free cash flow, this stock should be trading at 83. It's currently priced at 90. So it's a little high, according to that model that's being used. But if you look at the PE ratio versus its peers, Marvell Technology is right in the middle, just slightly above Qualcomm, which is another stock that's on my list. I do not trade the other stocks here. So this might look a little disturbing, and I always want to buy undervalued stocks. The price in 1 year, the target price, is much higher than the current price, which would indicate that this stock has a ways to go yet. Now, this is a strong financial, healthy company. The long-term assets versus their liabilities, that's what you want to see, but also you want to see the short-term like this too. They're in good shape. They're not paying much of a dividend. Now, before we move on, I want to make sure we look at everything in the strategic point of view while we're doing our fundamental analysis. On Tuesday, around 9:45, we'll have the manufacturing PMI, the services PMI, and on Thursday, we'll have the unemployment claims. Those are key levels to watch. I don't think it's going to affect this stock much at all. What's going to affect this stock is if the war ends in Iran. Now, currently, institutions and hedge funds currently own about 80 to 84% of the shares. That leaves about 16% to 20% available for individuals. And there's been some buying and selling from the insiders. Much more buying than selling. So the big boys are betting on Marvell. So let me sum up. Is Marvell undervalued according to Simply Wall Street? No. Marvell trades above fair value, and this is due to strong growth expectations. Is Marvell a growth stock? Yes. Strong forecast revenues and earnings growth qualify Marvell as a growth stock. That's what you want to see. And that growth is affecting the price. And you really can't say if the insiders are buying or selling. It looks like there's more buying than selling, but I think it's mixed. And there has been some recent sales in January and December. So the big picture here, we have a strong stock, has a bright future, should be growing, should hit 120, a conservative estimate based on a previous high is about 100, 102. We had a changeover recently of the MACD, and the RSI is pointing up. It's above the 200-day moving average and above the 100-day moving average. I think you could say the daily trend is bullish at the moment, and that's indicating by the MACD. And the weekly trends are showing a positive outlook over the last 2 weeks. Overall, I think you could say that these indicators would be acceptable for a long 15-month trade with the expectation that Marvell is going up. I will tell you that this is a very strong liquid stock. Now we're looking at a free tool called OptionStrat. Typing in Marvell, 15 months out, and buying a call. In this case, we're going to buy a 70 call, and we're going to have to pay for that. And we're going to have to pay a premium price of around $3,382. Now, if the stock goes like I think to about $100, this is your win line right here. And if it happens quite early, that's going to be good for us. A little later, maybe about $500 or $600. Between $500 and $600, let's say $600, and we'll hope for more optimistic. And some of those analysts think it's going to go up to 120, and that would be a good chunk of change. That's $2 grand, but we're going to figure around $600 if it moves up to about $100. That's our target, $600. So for about $4,000 in capital, that's margin reserve, I should be able to make upwards of $600. But that's not the end. We have to sell a call out of the money, a $98 call, a little less than a month out, and we're going to assume that we can do this 4 or 5 times, and we're going to get $200 in credit each month. And we're going to assume that we can do 4 times, and that's about $800. And when you add the $600, once it reaches 100, we'll have $1,400 in cash. And what you'll do is you'll move this every month. You'll move it up, hopefully, that as the stock price increases. If not, and you get assigned, it gets assigned, it's still higher than what you paid for it, and you'll make a little profit. Summarizing once again, for an investment of about $4,000, if your stock reaches $100 in 4 or 5 months, you've collected premium on selling the call, and you've benefited from the rise in the stock price. And that total investment is roughly $1,400 that you won, and that's roughly a 40% return. But you have to give it some time and some patience. And this is how I trade AI infrastructure stocks. Slow, steady, and patient. And I'm expecting my stocks to grow, and I want some steady cash flow while I'm waiting. So what do you think of this trade? Do you think Marvell will get up there to 100 in about 15 months' time? 3 months' time? There's no telling when. Maybe around earnings. Okay, make sure you like and subscribe. Do your own due diligence, and happy trading. We'll catch you on the flip.